Good morning. This is Trina Martin with UAN, and I'm here to present the UAN library training regarding the detailed expenditure codes. If you didn't get your handouts for today, there should be 3, and they were on our website. You can download them and print them. You're going to have a library chart of accounts and the handout slides for today if you're taking notes for the slides, and also Q&A document from local government services who have prepared those Q&As with the library program code definitions we're talking about today. So your handouts are right there if you didn't download them from our website ahead of time. We have representatives with us from local government services to answer the serious questions. I will be handling your UAN software questions, which are less serious and far easier to deal with. So we've got some professionals here to answer any questions you might have about these program codes as we talk through this process. So let's begin. All right, what is our agenda for today? Number 1, we're going to talk about what's the issue? What are we talking about? Because we really do have some very new fiscal officers who have taken the job since the training that I did back in October. So they've barely gotten through their first year end and are getting settled in the new year. And now we're throwing this at them. So some people were not really aware that this was coming at them. And this will be the first idea of what's coming up. We'll be talking about the deadlines and your timeline that you want to work on. Keep an eye on your deadlines. You want to evaluate your current appropriation accounts. We'll talk about adding the new appropriation accounts to be used within your deadlines. And we want to talk about advanced planning of your payroll setup changes for 2024. And we'll talk about considering your year-end carryover encumbrance issues, and you'll be planning how to overcome those toward the year end. All right, so the Uniform Chart of Accounts, what is it? Well, the Auditor of State's office has created a chart of accounts for libraries, just like it has for villages and townships. It's designed to organize your revenue and expenditure postings to make it easy to prepare an annual financial report that is accurate. Every library in the state can use the Uniform Chart of Accounts, even if they don't use UAN. It's just like villages and townships. Folks are out there still using paper books, and they use the Auditor of State's Chart of Accounts because it builds the items that go into your annual financial report to make it easy. So the UAN software is unique because it actually uses your posted transactions by account code to automatically build the core of your annual financial report. And you say, yeah, Trina, I just went through year end. There's not a lot of automatic to it. But if you never had to do a paper annual financial report before there was a UAN computer, all of those regulatory statements had to be manually figured by hand and totaled up by column. And the software really is doing that for you. Of course, there's extra work to do, all the figuring out of the carryover POs and things like that. But that's the day-to-day process of changing a year. It's not the annual financial report, which is built for you. And of course, let's not forget the notes to the financial statement, which everybody loves to do. I'm not going to minimize that work, but the fact is the core of the work is done. When you post a receipt in January, it is already in the place it needs to be for your annual financial report at year end. The software is doing that for you. Okay, so that is why we use a chart of accounts to automatically build the core of that financial statement. Let's talk about the accuracy of the UAN generated annual financial report. It's going to depend solely on the use of accurate account codes. So you could sit down in a system that has absolutely perfect accurate account codes for the annual financial report, but if you accidentally post a receipt to the wrong revenue code, you've skewed your annual financial report. Now in UAN, if you correct that before year end, you have fixed it. It's not a problem. It can be fixed the whole year long. You have time to catch it and fix it. So we're never going to be able to eliminate the human error of we are all going to make a mistake sooner or later, post something to the wrong account. I've grabbed the wrong BC and now I need to reallocate my payment. So using the accurate account code structure doesn't guarantee you're not going to make a mistake, but at least if you post to the right accounts, you're getting an annual financial report that is correct. Let's talk about the structure of an appropriation account code. So you have 4 groups of numbers in an appropriation account. It starts with the fund. Every library in Ohio has a general fund. So we're using our general fund as our example here, Fund 1000. The program I've got on my screen is 110. And of course, in the new program codes, that is public services and programs. Basically, what I think of operations on the floor of the library, when a patron comes in, no matter where they go, they are making use of everything in program 110, the floor of the library is how I think of it. So whether they check out books or whether they read magazines, this is what 110 is. The object code, that third group of numbers, is where an account code gets its name. So when you see 411, the description next to it would be books and pamphlets, because that's what 411 means, books and pamphlets. So our account code altogether would mean general fund, public services and programs, books and pamphlets. But you are the one that knows what 1,110 means. Of course, we all know the general fund. You will get to know your program codes. 110 means public services and programs. Again, I like to think of that as floor of the library. Now, the object code 411, books and pamphlets, is very simple. We're buying books. We're a library. So that was an easy one to choose for an example. The cost center is a UAN item that you can use. And I would say 90% of our clients don't use the cost centers. On every single revenue and appropriation account, they see 4 zeros at the end because they don't need to split an account. And I don't want to give anybody some crazy ideas. I just need to explain to you what it is and what it does as associated to your annual financial report. The cost center does nothing. So I have talked to library fiscal officers. We find library fiscal officers use cost centers for what they were intended to most often. We see a lot of misuse of cost centers that make the account code structure so much more complicated than it needs to be. But I'll give you a good example that a library fiscal officer shared with me. So our budget for 1,110,411 books and pamphlets would mean any book or pamphlet purchased in any of our departments in the library. So I've got a children's books, I've got a youth, and I've got an adult book section. I have 3 department heads who fight over the book budget all year long. And the example that I was given many years ago is the board got sick and tired of them constantly fighting over the book budget. So we created a cost center. Cost center number 1 is children's, number 2 is youth, and number 3 is adult. Each one of those cost centers has a number now, 1, 2, and 3, and it's attached. Each one is attached to 1,110,411. So you only attach a cost center to the account code it belongs to. You've got to be very careful not to attach it to the wrong account code. So now, instead of having 1 account code for books and pamphlets, I have 3. And there's no more fighting over the budget for books because each department has its own set amount. And some of you are saying, yeah, well, we tell them how much of the book budget they have, and that's what they have to deal with. Okay, don't put cost centers on things you don't need them. I would have to say that. I would say it 50 times if we really had the time for that, because if you don't need a cost center, don't bother with it. There's no point. You're splitting your budget into multiple accounts. So if 1 account code does the job, do it. But that's just an example. So we've got folks in the audience that have cost centers in their system, whether they are the ones that originally set it up or whether they have taken the job and have sat down to the UAN computer and those cost centers were already in the structure. And earlier this week, I was working with a township fiscal officer for a payroll issue, and she inherited a system. She's taken the job and found there's over 130 cost centers. and not one of them makes any sense. I can't see a reason any of those cost centers were required, other than the fiscal officer wanted to see separate account codes for everything. And it just doesn't make any sense. It makes it far more complicated to do that. So I don't want you to take this screen and say, now you know what a cost center, you're going to go wild with it. I'm only telling you what it is because I need to explain what it does. We have to use one as an example. So on the annual financial report, only the fund, program, and object code are going to place something. So if I created a cost center that said telephone, which would be absolutely ridiculous because there is an object code that says telephone. There's no reason to create one, but I've seen it. And I attached it to this account code 100110-411. I'm paying my telephone bill from the place for books. So even though the cost center says telephone, it's not reporting as telephone. It's reporting as books. So I've seen a lot of misuse of cost centers, and I've seen a lot of really good reasons to have cost centers. I have seen libraries use cost centers for different branches. So if you've got a main library and 4 different branches, and they want to keep track of what it costs to run each different branch, yeah, you've just split your electric bill into 4 account codes, the telephone bill into 4 account codes, the salary accounts, 4 account codes. Yes, I've seen it done, and that means you could produce reports that show what the branches do. But we're going to talk about cost centers. What happens when you add a cost center to a salary account is not a good thing. So I do see libraries using cost centers more effectively than we usually see the misuse of it in a lot of our other entity types. So yes, you can choose to use cost centers how you like, but you need to be mindful that you are no longer going to have everything in one program, which means you've already got an expanded chart of accounts. Do you really want to keep a cost center for each branch location? Think about that before you do it, okay? Okay, so what's the issue we're really talking about here? It's the 100 and the 200 program codes in the library chart of accounts. 100 and 200 are the summary program, which means underneath it, there are new, and I say new, but it's been many, many years since those were added, detail accounts, 110 and 120. And the 200 summary account support services has 210, 220, 230, and 280. And 100 and 200 are being eliminated. You can't use them anymore. And a lot of our libraries out there are only using a 100 program code for the whole operations of the library. Now that never would have been accurate because everything doesn't belong to library services. Quite a number of things belong to support services. So if somebody was using the summary codes, there should have been a 100 and a 200 program codes in that general fund. But we see a lot of libraries, and you'll see my example today, almost every account code in the general fund has a 100, which would have never produced accurate annual financial reporting. Okay, so when they added the detailed program codes many, many years ago, the assumption was people would start using them, but they didn't. So if somebody didn't tell me I had to completely change my annual financial structure, every single account code, I don't think I would have done it either. But many people didn't even know that they should be using these. So what's taking place now is there is actually going to be the removal of the 100 and 200 summary program codes. You have to use the details that 110, 120, 210, 220, 230. 280 is self-insurance, and it's less common to be self-insured. And we're not really going to talk a lot about that. But if you are a library that is self-insured, you will be using the program code 280 if you're not already using that. If you're not self-insured, and a lot of people are thinking, Well, how do I know if I'm self-insured? I think you would have known it by now that you are self-insured. It's very different than not being self-insured. So it has to do with insurance, the medical insurance. I believe it would be like the medical and the dental. You're self-insured. So our local government services folks can answer more to that. But self-insurance is self-explanatory, really. Library self-insurance programs that you have would be under that. And folks that aren't self-insured don't use it at all. So the 100 and 200 summary program codes are being eliminated from UAN as of December 31st of this year. And you're saying, well, I can't even add a new account code with those now. That's correct. You can't add a new account code with a 100 or 200 summary program code. That if you have to add an account code, you have to use the detail right now. But all of your account codes that rolled over from 2022 are still available for you to use in 23. Local Government Services has, an LGS is how we refer to them, has issued the definitions which describe what type of library activity should be budgeted within each one of these detailed program codes. And that's one of your handouts. You'll see a draft version, and it starts with frequently asked questions. And I read through this document and I learned something I didn't know. So it isn't that I know everything, but it's fascinating how you think you know things and then all of a sudden you find out something you never knew. So please read through those frequently asked questions. Those were very informative, very helpful, especially in the planning of the change to the account code structure. And so I want you to read through those. Don't just gloss through the FAQs and drop down to the definitions. Read those FAQs. They were very informative. You also have the library chart of accounts as a handout, and that's what we provide to our UAN clients who are new libraries coming onto UAN new. We just send them the PDF of the library chart of accounts. So we provided that to you today so you don't have to grab it out of the UAN manual. It's just a nice quick reference for you. Keep in mind that 2 or 3 years down the road, if there are changes to the account codes, you would want to get an updated copy from the UAN manual. But as of right now, those are the chart of accounts as they appear. And you can see that 100 is not on that list. The heading, Library Services, is at the top of the list of the 110 and the 120s. And under that, the 200 support services, there's no 200 number. So it's going to show just as headings to that range of program codes under it. So where are we in this process? Well, remember we had this presentation last October, and we talked about a lot of how you could get started on this. And we have some people who have not started yet. They decided, I've got too many things on my plate right now. I'm going to get through year end and then I'm going to start. So they haven't started yet, but they've been thinking about it. We have some people that are almost finished. They did start the structure thought process, and they are just about ready to wrap things up now that we've got the descriptions. You can finalize your account codes and move forward. And we had a handful of folks who heard the presentations last fall and said, yeah, I'm not going to stretch this out a year. They switched to the new account codes January 1st. So when they opened up temporary mode, they added all the new account codes and completely changed their payroll structure, and they're posting to the new account codes already. So we did have a handful of folks that said, I'm doing it now. I'm not going to wait a year. And kudos to them for that extra work. So the rest of us are going to be dealing that throughout this year. So keep in mind that you're going to say, well, a lot of what I'm seeing today is a repeat of what I saw in October. But keep in mind, we've got new fiscal officers and we have folks who haven't started the process and they want to start from scratch where I talked about last year in the fall. So we're going to cover that part again. Deadlines. So what's your deadlines? Well, to be honest with you, every single library in Ohio doesn't have the same deadline, which seems unfair. But the 2024 tax budget is going to be a guide. So if you are a library that's located in a county that requires the filing of a tax budget, you will be preparing and filing your 2024 budget this year. It's prepared and filed in 2023 for the new year. Now, all libraries don't have the same filing deadline. Libraries associated with a school district have a May filing. They have to file their tax budgets in May. And the rest of you, libraries not associated with the school district, you're filing in July with the townships and villages. So many of you did not realize they were two different filing deadlines. And so if you live, or not, it's not about where you live, it's where your library is located in a county that requires a tax budget, you need to know which of these deadlines belongs to you. UAN can't answer that question. If you don't know, I'd give a call to my county auditor, get the exact dates. There is a deadline to adopt and a deadline to file with the county auditor, and many other deadlines associated with the budget that we're really not talking about today, because what I'm talking about is the new account codes for the budget. This isn't really a budget class. There are entities located in counties that have abandoned the tax budget. They don't file budgets anymore. They have alternate processes to get a certification for their estimated resources in the new year. Now, those folks sitting in the audience are like, yeah, no, I don't have a deadline in May. I don't have a deadline in July. Please think of September 30th as your internal clock deadline, because you do not want to drag this into year end without the work done, the mental work and preparation done. So I would say, you know, what we find in UAN is between July and September 30th, it is a slow call volume period. Folks that don't have to file a tax budget, that's the time you could call us for software questions and how do I restructure payroll questions. We'll talk about that more, but you really do want to have the brain work, the paper figured out, what account codes I'm going to be using, what will be my 2024 appropriations, my permanents and my temporaries, as best you can get them. Of course, permanents are going to be tweaked by how much you actually roll over the new year with. We all know that. But you want to figure out purchase orders as well, and we'll talk about that later. So if you don't file a tax budget because you're in a county that doesn't require it, I would use September 30th as my deadline to have this all figured out so that you're not dragging the work into year end. Okay, the tax budget prepared and adopted in 23 has to have 2024 budgeted on the new detailed program codes. So the entities that have to file a tax budget, whether in May or in July, they need to know what new account codes to use in the budgets. So everything in the history is going to be on your old account codes, but you will be budgeting 2024 on the new accounts. You're going to still complete 2023 with your existing appropriation accounts. That hasn't changed. Just because you're adding the accounts in order to use them in the budget module does not mean you have to start posting to them. So continue posting 2023 on your existing account codes. That promise has not changed. Now in December, you have to think about this as it's coming. You cannot carry over encumbrances on the old appropriation accounts, the 100 and 200 program codes. Can't be done. The software won't even see them. So in normal years, from one year to the other, the software handles that seamlessly. You have unpaid withholdings from December, you pay them in January, the software carries them over. It's just seamless. And the same thing with the purchase order. You buy something in December, it might be delivered at the end of December, but you don't get the invoice and it's not paid until January. In past years, that carryover encumbrance was a piece of cake. You know you're going to carry that PO over and use it. You're not going to be able to do that between December 23 and January 24. So you have to think about what you're doing as you get closer to year end. And then in January, when you open up temp mode and log into the new year, you will not see any account codes with a 100 or 200 program code in the areas where they're used for transactions or budgets. They're not going to be there. Of course, all prior year reports will still show the history in any year before 2024 where those account codes were used. That does not change anything. So All the prior year reports will still show that history just like it was posted in those years, but the new year will not see those account codes at all. Okay, so where do I start? Now, the process hasn't changed, and I have thought a lot about what the libraries have to do. I've thought a lot about it. You're our clients at UAN. We're the ones that take the calls when you ask questions. I think about how difficult this is going to be and how we can streamline that process. And I still think that the process I showed you in October is the best way to do it. So steps 1, 2, and 3 are still the same. Evaluate your current appropriation account structure. Identify all account codes with a 100-200 program code that have to be changed in time for the 2024 budget. And for those of you that don't file a budget in time for 2024, determine the new appropriation accounts that have to be added into UAN to be used on your deadline. Okay? That 1, 2, 3, and that sounds so easy, but notice the little guy picture I put there. He's sweating. Yes, it sounds easy. I know it's not. Okay, so UAN has the ability to export your entire appropriation account structure with the budget, and it always has had this ability. So as I'm looking at the software and thinking about what does UAN provide that's going to make this easier for our libraries, and exporting your appropriation account structure is still the best method I can think of. So in UAN, you've always been able to do this. If you've never done it before, this is where you want to go. Accounting, reports and statements, appropriation reports, and you're all familiar with appropriation status. But on the drop-down list, the very last items in any drop-down list on reporting, if it says export in the name, it will export to an Excel spreadsheet. So from the drop-down list, choose appropriation export. And then I want you to select all of your account codes, not just the 100 and 200, because I want you to think big picture. Don't think little tiny picture, because that's only going to solve one problem for you. I would rather have a big picture where you're going to have a working document that will solve all of these issues. So I say select them all, and then when you click the export button, this save form that you're seeing on the screen, I did a screenshot of that, is going to pop up. Now this is automatically going to default to your C drive UAN e-files folder with a very vague name, appropriation export with a date and time. You can choose where this goes. So if you click on, under this PC, click on your documents folder, it's going to put it in your documents folder. And then you can change the name to something meaningful so you don't lose track. Where is that spreadsheet I saved? So I've named it appropriation account crosswalk. And so you have the power to do that. Anytime you're exporting or saving as PDF, you can direct things where they want to go. So decide where you want it, because it's going to go in the UAN e-files folder for default. And I'm directing mine to documents, and I gave it a name. Click save, and then of course the next thing we're going to do is open that spreadsheet and evaluate it. So there is a screenshot of what the export looks like. This is just an example. Now I did borrow the data from a library, an actual library. So these are the account codes a real Ohio library is using, and the fiscal officer is not the one that set them up. They inherited these when they took the job. This was the structure that was in place. So the export contains columns I am not going to need. Now I've put a red arrow on the ones I want to keep, the account code, the account name, and then the final appropriation. It's my 2023 permanent appropriations. And some of you say, wait a minute, I exported last year. Okay, that's fine. You've got a working document. I'm not telling you you have to start from scratch again. Don't do that. And you probably, or if you've got a working document from last year, you may have already gone down through and put the 2023 appropriations in there. Or you might not be using this document so you can see the current year appropriation. That's up to you. But this is where it exports from. You do not have to start your work over if you started last year. And I'm going to delete all of the columns that are just not necessary in this thought process. So the reserve for encumbrance and reserve for encumbrance adjustment, I'm going to delete those. I'm going to delete the current reserve for encumbrance all the way to year-to-date percent expenditures. And I'm going to highlight in yellow all of the account codes that need to be changed. So that's what this little spreadsheet looks like once I delete those columns. Now, as you can see, this library only has 2 account codes in the general fund that could remain. But oddly enough, after I read the frequently asked questions provided by local government services, I learned something I did not know. It says when you're using capital outlay within the general fund, and I'm paraphrasing, they of course said it much better than I am, you would use the program code associated with the capital outlay. And it's only when you're using a capital outlay fund, and many of you have capital outlay funds for major projects or construction, those capital outlay funds use the capital outlay program. And when you're adding an account code in UAN and you pick either the 760 capital outlay program or the 750 or any of the other capital outlay object codes, the software pops up a system message and it says it is recommended but not required that you use a capital outlay program with a capital outlay object. And I always thought that meant that you're always supposed to use the capital outlay program with the capital outlay object, and that is not accurate. If you read the frequently asked questions, you will find that within the general fund, when I am budgeting for capital outlay, I should be budgeting it at the program level where the money is going to be spent, not at the overall capital outlay level. That would be used in a capital outlay fund. So for example, on the screen at the bottom, you can see I've got a 4001 767.90. That is a capital outlay fund. Its only purpose is for the capital outlay project, and therefore it is correct to use the 760 program with the 790 object. So not everybody's going to use 790. That was the structure that was in place when somebody walked into this job. So I really want you to read those frequently asked questions, because you may find things that we're not talking about, the 100 and 200 program codes that need to be changed, and those frequently asked questions might address that. So just like I learned that. So you will see a pop-up box that says it is recommended but not required. So follow those frequently asked questions from the local government services folks that guide you in when it's right to use the capital outlay program with the capital outlay object. Okay, now I added columns to this. So to the left of my current account codes, you see those in yellow. Let's see, I have drawing tools. Okay, you can see right here is my old account code. And so if I know I'm not going to be using these old account codes, if they're going to be replaced with multiple account codes, I repeat the grid and I have it in orange. So these are all replacing, and I know this freaks you out because libraries have one salary account and every single person from the library has been paid from that salary account. And I always wondered about that. Now I know why. But if you notice, I've cut and pasted a screenshot of the library program codes we're going to be dealing with. Some of you will be using other program codes like the self-insurance and the intergovernmental, but they're not as common, so I'm not using them as an example. I'm not trying to indicate there's anything wrong with those programs. It's just the less commonly used, and I didn't want to confuse 300 people in order to tell people what you already know is accurate. So if you've got self-insurance, use 280. If you have intergovernmental business that belongs under the intergovernmental program, use it. Okay, so my salary is going to be switching to 5 different programs, 5. And I can't figure out how any library could use less than 5 programs. To be honest with you, some people would say, well, we don't have an IT department. Okay, so that means you think you wouldn't use 220. But if you don't have an IT department, you are certainly contracting with a company to do your IT work. Therefore, that should be budgeted under 220. So yes, if you don't have an IT staff that you pay salary for, there'd be no point in putting those account codes in. But the fact is, I have people working and being paid from each one of these programs. So again, read those program descriptions. I think it will make it very clear what belongs under each of these programs. So I have created a grid. The salary, OPERS, and Medicare is splitting into 5 separate programs. Salaries, OPERS, and Medicare for each program. 1, 2, 3, 4, and 5. Okay, so each grid. We're going to talk about how I split up the salaries because that's less easy. So I didn't just go 195 and guess. So if all salaries were budgeted at 195,000, I am now going to have to split it into 5 groups. I need to know who works in those groups, don't I? Yeah, so we'll talk about that further. That is a thought process. The Medicare and the OPERS are very simple once you figure out the salary. So don't try to figure out OPERS and Medicare at first. You've got to figure out how much to budget to each of the salary accounts. And then OPERS and Medicare is a percentage. That's the employer share, not the employee share. It's the employer share. And there's few rare people that have, they pay fringe benefits, meaning your library pays a portion of the employee share of OPERS. I don't think that happens very often with libraries. But if you have that, you're probably paying that fringe from the same account code, the employer share. So you would just be using a higher percentage to figure the employer account. So it's this, once you figure out the salary account, you will be able to figure by percentage the OPERS and Medicare for each of these groups. So that's not such a stressor. Once the salary is figured out, I'm going to talk about that more in a little bit. Workers' comp. Yes, I'm splitting that between 5 programs. Now keep in mind, the whole point of this exercise of changing your entire appropriation account structure is because it produces an accurate annual financial report. So we're not going to slack on this. We're going to do the work, because what would be the point of throwing workers' comp under business administration? It is going to inflate what it costs for business administration. It's not the right thing to do. So I am splitting workers' comp because workers' comp is based on employees paid, right? When I was a fiscal officer, and that's been 10 years I've been at UAN, so that's going back a long time, and they changed things since then. You do the true ups, and some people pay every month instead of once a year. So I don't really understand how that works on a day-to-day basis as I used to. But I know that in 2024, I am going to budget workers' comp from the program codes, and you put a cushion on it. You haven't even figured out the salaries yet. You want to budget a little cushion there. And remember, if it comes around next year and you find you figured out other numbers, you want to tweak those before you adopt the permanent appropriations. But yes, I'm splitting them 5 ways because I have salaries in 5 programs. Yeah, I know it's annoying, but this is how you produce an accurate annual financial report. So my salaries, OPERS, Medicare, workers' comp, 5 different programs, 5 different grids, right? Now I get to the easy ones. Dues and fees goes to 1 account code. I'm going to put dues and fees over to 1,233.11. It was but what I really want you to do, because when I talk to fiscal officers about what they're using that program code for, or that object code. So let's just say that's a 1,103.11 right now. What are you using it for? Bank fees comes up a lot. I put my bank fees there. That account code is not used for bank fees. Dues and fees don't mean dues paid to association and fees paid to anybody else. It means dues and fees associated with memberships to organizations. It doesn't mean bank fees. So while you are restructuring, I want you to look at the object codes you are using to post to now, because you may find, like other fiscal officers have found, that account codes that were set up and used by somebody before you, and that's what you were trained to use them for, it's not what they're supposed to be used for. So if you look up on your chart of accounts to the object codes 311, it will say all dues and fees associated with memberships, I believe. So I don't have that in front of me right now because you do. And I'm not going to pull that up on the screen. I need you to look at these things. So when I found out we had 2 account codes that were being used for dues and fees, one of them is this 311, and the other one was a 500 code, which I thought was unusual, which also it says, it doesn't say dues and fees, it says dues and something else. It's further down on our list here. We'll get to it. But it also only means dues associated with memberships. And so we were using the dues and fees for actual fees charged to us, and I needed to come up with a different account code for that. So yes, we do pay for memberships, and I am going to budget this account code in 1,233.11 because some dues and fees are paid there. But we also, I'm rethinking that as I move on. Travel and meeting expenses, every single account code is not going to split 5 ways. They're just not. So you don't have to add 5 accounts to replace every single account. Some of these are going to be split into less than 5 because they're only used by 2 of the programs. And travel and meeting expenses is one of those examples. So I started with the 1,100, 312, which means travel and meeting expenses. You can pay it outright or you can reimburse, right, from that account code. That's the only thing it's for, is travel and meeting expenses. And what I found when I looked back at who we send to conferences, we send some of the librarians to conferences, and the director and the fiscal officer go to conferences. That's only 2 of my 5 working programs. You may say, wait a minute, we send our IT people. Okay, you would need 3. And then other people would say, hey, wait a minute, my collection and development and processing folks go to a conference. Okay, you need 4. But do you send your janitor and your maintenance man to conferences? Is there ever travel and meeting expenses for the janitor and the maintenance guy? And you say, well, we reimburse his travel expenses when he has to travel a long way to get a part. Okay, so you do need more than I was thinking. But in my sample, we really only pay 2. There are only 2 groups of people, the people that get paid from 110 and the people that get paid from 230 are going to get reimbursed for travel and meeting expenses. So I'm splitting that into 2 accounts, not 1. And I know you'll find that funny because the original appropriation has a penny on it. And that means I'm splitting the 2024 budget with the penny on it. And that always makes me laugh. But I did it for giggles. So most people will round their appropriations. And if you appropriate 100% of your resources, you're going to have pennies in there as well. So I put it in there for fun. Now, telephone, every time you see the yellow account code with a single account code to the left, that means this translates to 1 account code. So anything to do with this facility operation and maintenance, and that includes utilities, telephones, internet, it's infrastructure. That's going under 210, facilities operation and maintenance. So telephone, boom, over to 210. Postage, I originally thought that's going to go to the fiscal office. That's where most of the postage is used. But the more I thought about it, the more I thought I've probably got that right. And you guys are probably laughing right now because probably 110 uses 3 times the postage as the fiscal office. And you just say, we get a postage machine, we're shipping books between interlibraries. It's the 110 program that would use more postage than the fiscal office. So if I show items budgeted in the wrong program, you can laugh about it, but budget them where they belong. Because I work at UAN. I've never been a library fiscal officer. You know better than I do where things would belong. And anytime you can see a glaring mistake on my part, that's just something you can laugh about. I don't want you to use my examples if they're wrong. You can look at that and say, yeah, Trina didn't know what she was talking about. So it depends on what is getting paid from this item. Sometimes you're going to have to look deeper and determine whether this splits. Property insurance premiums, I'm putting that on 210 because that is the insurance for the property. If somebody trips and falls going up the steps, that is a property insurance issue, isn't it? That our insurance covers these things. So a lot of things that I hadn't really thought about being part of facilities operation and maintenance actually do become facilities operation and maintenance. So we do see, I'm trying to play with my tools here. Back to my pointer. So we do see a lot of things being thrown under 210 that I didn't anticipate. So all my utilities, all of my maintenance and repair on facilities, everything regarding the care and maintenance, the snow plow, the purchase of salt for the sidewalks and things, those are all going to go under facility operation and maintenance, right? My maintenance guy, my janitors, if you've got a full-time staff for that, things like that. We're going to talk about the division of jobs between people a little bit later, because you do have to understand that, and you may never have tracked it before. Water and sewage, natural gas, these are all things going under facilities operation and maintenance. And I think if I click, we're going to talk about the employees now. So you can see that I went through that spreadsheet, and but I didn't just sit there and make those numbers. I actually had to think about real employees and what do we do. Now, if an employee they only work one job, one program, that's easy. So my maintenance guy doesn't do anything else. He's really easy. Maintenance and janitorial work, boom, he's paid from one program. I have to worry about that. So you will have some people who have one thing they do, fiscal officer, right? But I've also had some folks say, well, as the fiscal officer and the director, we also cover the floor when people are on lunch or called in sick and we're short-staffed. Do I have to split their hours? And I would say that's a really good question for local government services. These folks are the professionals here to answer questions like that. But think in terms of, I've had another fiscal officer say, well, you know, the library staff who get paid from 110 also do some janitorial work. They dust the shelves, they change the light bulbs, they empty the trash. Okay, that does not make them janitors. So most of us in our day job have to keep our areas tidy, and that does not change the fact that I work for UAN support. I just have to keep my area tidy. So, you know, my cubicle is not reeking and my trash can overflowing. So there are people who come and empty the trash can, but there are also times where I have to take my trash can and empty it. That does not make me the janitor. So when somebody is simply covering for a short period of time, or, you know, the folks that work out on the library floor empty a trash can or two, does not make them janitors. So don't overthink this. Don't overthink it. But you do have people who work in multiple departments. So I had a library fiscal officer. I've had some fascinating conversations with you folks. It's really been enjoyable to me to help me better understand what you're dealing with here. So I had a fiscal officer who said that after the October presentation, he got to thinking, he knows he has employees that work in other programs. So somebody who works the library floor also helps out in IT or helps out with the computer software that is the collection, development, and processing. That's the computer software and the work that involves keeping track of library loans and your patron memberships, what they've got checked out, what they haven't returned, what they renew. That's a whole different division. That's your program 120. So you will have people who cross over and work, and nobody's ever asked, how are they dividing up their time? So right after the October, or shortly after the October presentation, one fiscal officer edited his timesheets. He's got a Word document and that's what everybody uses for their timesheets. And he added to it a place where they can keep track of the hours, because nobody's ever tracked it. They don't really know how much time is being spent. So he will have about 6 months of work and of data. So he hasn't begun paying them differently. They're still being paid from 1,100, 110, but he's gathering data, because what he will know at the end of 4 or 5 months, I don't know what his budget schedule is he will kind of get an idea that in a paycheck, somebody is working about a fourth of their time helping out in the collection, development, and processing program. Or you've got a guy that works mostly IT, but maybe spends a quarter of his time working the library floor. So I think that you will find that if you ask people to start tracking their hours or simply have conversations with them, and you may find that every Tuesday they work in IT, and every other day they're working on the library floor. So it is going to be up to you to start gathering that information from employees. Yes, I know, but how else would you figure out how much to budget? So once you understand how people work and how their salaries should be divided, we have split methods. You guys aren't aware of it because you don't have to split, but you can split an account code, or you can split an earning into multiple account codes and put the hours on each. So manual split is a method in the payroll software where you would put the number of hours that they worked in 110 and the number of hours they worked in 120. And it pays from different account codes. They still get one paycheck. It's still coming from the general fund, but it is reporting to the right program. So once you figure out the division of the salaries, you'll be able to split those salary account grids. And once you budget the salary, you then charge the percentage of OPERS, employer share, and Medicare employer share. And that takes care of it. It's going to be a little difficult I know you're going to say, well, what about medical insurance? Yeah, it's kind of going to be split as well. You have to know what it costs to operate each division. And medical insurance isn't in my software or my example, but I know most of you have that. And it means splitting more things. Yes, it does. But once you figure out the split of the, how the salaries are going to be divided, you will then use that same portion to split the medical insurance and the vision, dental, however you're doing that. So understand all the items that go with a person's salary and everything that follows that. Withholdings are going to automatically follow. The payroll software follows, the employee share follows the earning. That's not a problem. And the employer share can also follow the earning. We have a setting in the payroll software that would do that. So figure out your salaries and then figure out all the things that are split based on that salary. So I wanted to show that. Yes, I know the larger you are and the more benefits that you offer, the more account codes that are going to be splitting. But once you figure out the salary for individuals, you'll be able to figure out those other things. So back to the spreadsheet, that's how I got the division. So of course, if people work overtime, you want to cushion in there for that. If you have leave payouts, if you've got people getting ready to retire and they're going to have large leave payouts because they never took a vacation day, of course you're going to add cushions. It's just like the fact is villages and townships have been budgeting like this since always. They have always had to split accounts. And it isn't that they don't even think about it anymore. So take, for example, you've got a small village and they have a water plant, a sewer plant. They have to take care of the streets. They clean the municipal building and they do landscaping and they mow the park, right? Okay. The maintenance department generally is one person or two people and they work everywhere. They might mow at the water plant or the sewer plant. They might help fix a broken water line. So they would be turning hours in to be paid from water. And they help mow at the sewer plant. They turn in those hours for sewer. They clean the town hall. They turn in those hours for general. and they mow the park. They turn that in for the park. They have always, villages and townships have always had employees who get paid from multiple account codes, and the employer share follows for OPERS and Medicare. And they also have to divide up the insurance and the workers' comp based on these wages. So this isn't introducing something brand new that libraries are the only ones that have to do this. All the other entity types have always had to do this. So I'm not saying you guys are slackers, you didn't know, but this is normal in fund accounting. You are running a government type entity, and the annual financial reporting is required to show what the money is spent on. And that means separated by programs. And when people work multiple positions, you're going to be splitting that and everything that's associated with it a little bit. And understand that the first year is going to be a learning experience. So you are figuring out the basics. You want a little cushion on each one of these, as much as you can on the salary account. So if you have a cushion on the salary account, that means a little extra than exact. Then that means that if somebody starts working more or under 110, you've got a cushion to cover it. Or they start working more with the IT department, then you've got a little cushion to cover it. And if you're using the salary line to figure out the percentage for OPERS and Medicare, those also have cushions built into them. So it won't be until after you post an entire year. So at the end of 2024, you'll have a better idea. You might have to reallocate appropriations to get through the year, because positions change. Somebody might retire and you're replacing them with two different people because they had a lot that they handled, and you can't find a single person who can do it all. So you'll see a lot of changes. It is going to be a learning experience. And budgeting is my best guess for how we need to spend our money next year. So you are doing your best guess. Nobody's going to be perfect at this, and it will be a learning. There's going to be a learning curve to this. You may find you're going to be reallocating a lot of appropriations. So keep working through until you have translated each of these account codes to either you're splitting it into multiple accounts, or you are translating it just to one, like a lot of those facilities, operations, and maintenance. Okay, the bottom of the list looks a little different. I want to get to the bottom of the list where I'm also split. I want to talk about computer services and information. 414 means the language of it, the words say computer services and information. And many of you may find that account code was used for things it should not have been used for. And I want to show you the chart of accounts and talk about that. Because 414, computer services and information, is only for public use software. It's not for anything else, public use software. So items in the 411 through 419, these are things your patrons either check out, or like your publications, the periodicals, they'll sit at the library and read the paper and the magazines. But 411 through 419 doesn't mean anything except what is used by patrons. So this is a discovery. So if you read the description, you may find you've been posting things to the wrong account code, maybe because someone trained you that way. Not pointing fingers here. I just want you to evaluate your object codes as well as the program codes. Make this as the best annual financial report you can get, is what you're trying to do here. So under the 411 through 419 range, I wanted to show you, I came up with the use of a cost center. So you can see I split computer services and information into two accounts, and the second one has a cost center on it. Let me see if I can, there. I've outlined that. Now you can see that after 414 on the second account code, it has a 0001. And I highlighted in that little purple shade, electronic material. So when you look at, I remember I told you in October, I got to look at that report you file with the libraries at the end of each year. And that thing is a monster. And what I noticed on there is you have to account for the amount you spent on electronic material. And there is no account code for that. Whether that should be added as an object code to the chart of accounts is not up to UAN, of course. But if I had to fill out that annual library report, I think that what I would do is create a cost center for the electronic material. Now, I want you to think very carefully about this because cost centers are a thought process, and you need to attach the cost center to the place on the annual financial report it belongs. And it is up to interpretation sometimes. So it's very different than trying to attach a telephone to books, right? Nobody's going to do that. But I thought this through. So if there is no account code for my electronic material, and our library does electronic material, I'm currently reading a book on my phone right now. I always have a book on my phone. But the fact is, we're spending money on that. You probably have to pay for licenses for all those things. It's fascinating to me. Well, I've never thought about that before. I just know it's available. But if you have to track the expense of that, there is no single account code on the chart of accounts for it. You've been lumping that expenditure into one of these other accounts. And then at year end, you have to sit down and look at everything posted to that account code and figure out the difference between what it belongs to, so that you can fill out that report for the library. So I decided I would create the cost center electronic material, and I would attach it to computer services and information because that's public use software. And I'm thinking public use software, electronic material, right? And you're saying, Trina, those are books. Those are books people are checking out. That cost center really ought to be attached to 411. I'm okay with that. You could actually attach that to 411. Then I get somebody else who would say, Trina, a lot of those things that get checked out are books, digital books. That would belong under audiovisual materials. You're right. So the fact is, the electronic material cost center could be attached to books and pamphlets. It could be attached to audiovisual materials, or it could be attached to computer services and information, which is for public use software. And it could also be attached to other library materials and information, right? So as long as it's in the range of 411 through 419, you are in the right reporting range for items the public checks out digitally, right? So that's why I created the cost centers, because I have to account for that on that library annual report. And I want to be able to just look at my appropriation status and pick the year-to-date number for that. So you can see that's a good reason to have a cost center. I need that number at year end, and I don't want to have to sit and dig through 57 purchases to determine which one's which. I want an account code that represents it. So add a cost center, but make sure you attach it where it belongs, to an account code that represents. And you can see in an item like this, different people would attach it to different earnings, but as long as it's in the right range where it should report financially, not really a problem if one of you thinks it should be books and another thinks it should be audiovisual, as long as you've got it. So you would have the single account code for the computer services and information, public use software, you have those things, and you would have the second account code with the cost center. So you can see, and then I've split the budget because I have no idea what you actually pay for these items. So I had to guess that it's going to be $20,000 because I read a lot of books, and I'm thinking that libraries have a lot of copies of digital material. I'm sure that stuff's not free for you. So you're probably laughing that it's either that is way inflated when it should be for a small library, or it's not even touching it. So I realize I don't know the ins and outs of that. You can see that as I go through the rest of this list, one of my account codes in my capital project, this is a state grant that we have this year, which will be spent and we won't have next year. If I was going to keep that fund and use it for later, I would change that 2001 100,390. But the fact is, my next state grant might not be for those things. So I would need a different account code if it's a different grant for other items. So let's move on. What I did, once I translated old account code to new account code and all the splits and all the budgets, I copied that tab. You want to copy that because you want to keep that, because at some points you're going to, and I had to do this more than once, refer back to the original. So I want you to make sure this tab is not lost. You want to keep it. I just right-clicked on the tab and told it to copy and move it to the end of the spreadsheet. So it's another tab that's a copy. And then once I got over to the copy, I removed the old account code column, and I removed the 2023 budget column because I already figured out 24. And now I've sorted it by account code and separated the programs. So it's just a matter of deleting the columns on this copy, this new copy. I've still preserved the original one and sorted it by account code. And you know, I'm an experienced fiscal officer. I've done things like this a lot. And what I found fascinating is once I sorted it by program code, and the first thought in my head was, have I fully funded? Meaning I have all the account codes that really represent the expenditures in the 110 public services and programs. And what I found was, and especially conversations with you folks since October has really tipped the balance in my head. So I got to thinking, we have a whole bunch of copiers out on the floor of the library that are for public use. People can make copies, and some of you have coin operated machines, and others, people make copies and go over to a desk and pay for their copies. So we have two kinds of copiers. We have copiers that we own, that we pay a maintenance contract on, and when they need repaired, they'll bill us under that. I had no account code for that within the 110 program. So I added 332, which is nothing more than maintenance and repair on equipment. So if other machines on the floor of the library need to be corrected, that would still be it. But I was thinking copier and bond premiums. And I think I saw somebody put that in the chat. You haven't talked about our bonds. So yes, anybody handling money should be bonded. And the Fidelity bond premiums is an account code. That's its whole purpose. And yes, you might be paying it from a summary account. We'll talk about that in a little bit. But the fact is, it was kind of buried in an account code where it didn't belong. So I put the Fidelity bond premium account code. These three account codes are the ones that I added because when I looked at this and said, is this program fully funded? So do I have all the account codes that represent what we really do spend there? And I was short these. And then the last one is we have one big new monster copier that does all the bells and whistles. It scans, it faxes, it staples, collates in any way you want. And we lease that. So 351 is for the rents and leases of equipment. So I went ahead and added these three account codes and figure the amount we spent on it. So I want you to eyeball this and make sure you're not missing something. So notice at the bottom, I've got general administrative supplies. And as we talked about in October, I said, there are, at the library example I was using, we have a closet full of supplies. And every time someone needs one, they go in the closet. How am I going to split up administrative supplies, really. And the fact of the matter is, the more I thought about it, and you've probably done the same thing, 95% of those supplies are used by the floor of the library, 110. Of course, the fiscal officer is using paper and toner for the UAN printer. So I put the core, I put a general administrative supplies under 110 because they really, most of those supplies, office kind of supplies that we use, are spent for that purpose. Notice I have budgeted, we are budgeting in the new year the purchase of furniture and equipment. So for the library floor, we're replacing some chairs, little tables, and you're thinking, Trina, $5,000 is not going to touch that. I get it. I really don't know what those things cost these days. It would probably shock me. You would know better. But notice I don't have a cost center on it. You don't have to, if we're spending $2,500 in the children's department for a table and chairs, and the other $2,500 in the adult section to replace a couple of chairs. I don't need a cost center for that. I really don't. Don't overdo the cost centers, please. So I can budget to 110, 750 furniture and equipment, and that means the replacement of furniture. And remember, capital outlay means, something that's going to last. So make sure it's not just a regular old thing like a supply that you're purchasing that is going to be used up in a year or two. This is really capital outlay kind of thing, the purchase of furniture and equipment. So I wanted to show that those frequently asked questions made me change my mind about capital outlay on there. So I got this grid fully funded. Now, many of you are not going to agree with me about that electronic material and public use software. I get that. I just had to pull a need for a cost center out of my hat. To me, public use software is different than electronic material. But in your world, you might be laughing and saying, well, you don't need that. Okay, don't do it then. So you know better than I do what you have and what you spend. So I just had to pick a cost center out of my hat, and looking at that library report, I determined that something needed to be added. If it's already in the system, if it already has an item, a program, an object code, then use the right one. Don't use my example. Okay, so I wanted to talk about the difference between summary and program codes, because a lot of you are saying, I don't use 4, 11, 12, 13, 14, 15, 16, 19. I pay everything from 410. Okay, everything, I want you to look at this because this is everywhere in your software. You have summary and object codes. We're talking about the third number, the object code. There are two kinds. There is a summary code, and if you turn to your chart of accounts handout to the object code list, you will see that there is always a bold item, and then the numbers under it roll up into that number. So you can choose to use the summary account 410. And you can see in the description, it's a summary object code for library materials and information. Things that post to 410 have to be the description of items in 411 through 419. So if you choose to use summary accounts, and I know folks who absolutely love summary accounts, I'm a detail account kind of gal. I always wanted to see the detail. Other folks, it rolls up into the summary, and at year end, they will split that up for the library report. For annual financial reporting in UAN, you could very easily use 410. There's nothing wrong with that, but you will have to sit down at year end for that library annual report to figure out how much was spent on each item. So if I have to sit down and figure out, I want the detail accounts. You may think differently. There's nothing wrong with using summary accounts, but if you use 410, you should not also be adding 4, 11, 12, 13 through 19. You are either going to use 410 or you will not use 410. You'll use the detail in that area. And you can use summary accounts in one place. For example, like utilities. Some people don't want to see individual utilities. They want to see just one account code for utilities. And that's not a problem. You can use everywhere in the chart of accounts object codes where you see a summary account, you can choose at that level whether you want to use summary or details. But if you use the summary, don't use the detail that rolls up into it. And it will always show you in this description, it comprises detail object codes 411 through 419. So anything that is in 411 through 419 could be posted to 410 instead. So think about that. Do you want to be doing detail, or do you want to be doing summary accounts? And again, anywhere in the chart of accounts, you can make a decision at each object group. You don't have to have it the same all the way through. Just use them accurately, post things to it. Now, utilities is a great example because I see a lot of entity types using utilities, and they're posting the telephone and the garbage to the utility account. Telephone and garbage don't belong to utilities. They don't. If you look at the object code, I believe you will see the same thing on your chart of accounts that townships and villages see. Telephone belongs up with communication, and garbage belongs with property service, whereas electric is in the group. Electric, natural gas, water, sewer are in the utilities group. So make sure if you're going to use the summary accounts, and you can switch from detail to summary when you're making this change, you are using it for the right purposes. So if you've been throwing telephone into utilities, stop doing that in the new year. So budget to the correct account code where things belong. So it still would be part of the facilities operation and maintenance, but utilities would not include garbage and telephone. You'd have to have different accounts for those. Okay, so that's my little talk on the difference between summary and detail and the object codes. Let's move on to look at each of the other programs that I sorted. So here's my next two programs. I can fit two on a page. My 120 collection, development, and processing. Again, these are the folks that are managing the computer, and you're saying, Trina, you have budgeted so little money. We're a tiny library that exists in my head. So it's not a real library. I know that. But let's say we're a small library. We have one person who has run this software for 10 years, and they do it by themselves. They never take vacation, and we budget a part-time person to this. Now notice also, so I've got the usual salaries, OPERS, Medicare, workers' comp, and I've also got a little bit of general administrative supplies, a tiny bit. This person has an office. They don't even have their own printer. It all prints to they print out to the library printers and walk out and pick it up. But you never know, a tiny little bit. They might need something. I gave them a bit. But the main one here for expenditures is other purchased and contracted services. So we have to pay a fee, a quarterly fee for the software that we license to run this. So I'm sure $8,200 wouldn't cover that. But you see what I'm trying to get at, that software licensing or cost of having that software, you might purchase it outright, would be in this department. It's not going to be paid. So 120 is going to cover the cost of that software and the computers, whatever it costs to run that is going to be there. So I've got a purchased and contracted services. That is not purchased things and contracted services. That is purchased services and contracted services. So that account code 390 does not mean supplies and services. It means a contractual arrangement. And we'll talk about that more. We had a couple of people told me that they had been using that account code for basically operating supplies and contracted services because the word purchased misled them into thinking it was purchased things and contracted services. Well, they're two different things. So a 300 range account means you are paying for a service of some kind, a purchase service of some kind, where a 400 means you're buying stuff of some kind. So 120, I know you're going to have a large staff operating this, and you'll have medical, dental, vision, all the things that go with it. We've already talked about that. You will have more structure than I'm showing here. 210s, facilities, operation, and maintenance. Again, I've got my salary, OPERS, Medicare, workers' comp for our part-time maintenance and janitor. And again, not realistic numbers, I know that. But also under here is the infrastructure cost, the telephone, maintenance and repair on facilities. So I want to talk about that. So 331 means we've got the HVAC company come in to check on something's not right with the furnace, or we have a contract with them, we pay quarterly, and that means that if we have a repair, we get a discount on parts, whatever you get for that. So we would pay that maintenance contract out of here, or if a plumber comes, that we've got a leaky faucet in the bathroom, we're having a plumber come, I am paying a contractor for maintenance and repair on facilities. So let's talk about that. It's a 331 account code. And some of you are saying, wait a minute, he had to install a brand new faucet, so I have to use a supply account code. No, this is a contractual arrangement. So when your plumber comes and he provides the parts, then you are paying for that contract. He's giving you an invoice that shows parts and labor. It's a contractual arrangement for both. You're paying him for that. I would pay the whole thing out of one account code. It is the contractual arrangement to fix the leaky faucet, even if it means replacing it. I've got the insurance premiums. And notice down below the blue one, what was missing and what was buried in other account codes was all the cleaning supplies, the light bulbs, the furnace filters. All of those were being paid for out of a general administrative supplies. And that's not really what that means. So I found account code 452, meaning property maintenance and repair supplies and parts. So what this account code means is our guy went and bought the faucet and he fixed it. He got paid his salary for the time he took to fix it, but we bought the part. So this is not the same account code you would use if you get an invoice from a plumber that says parts and labor. That would all be paid under maintenance and repair on facilities because that's your contractual arrangement. But if your guy is doing the plumbing and replacing the faucet, he's buying the parts and you're paying his salary for that. So this is where supplies and parts. So this is where the cleaning supplies, this is all the cleaning supplies, the light bulbs, the furnace filters, little parts and things that he fixes around here, definitely should have had separate account for that. But now I've split that out and created the right account. And again, some of the capital outlay we're planning next year is on the facility. We're going to replace a door that needs to be fixed. These little things on the facility that are going to be upgraded a bit. So I put the cost of that in the program 210. So my capital outlay is budgeted with the program. My 220, very simple. We have a part-time guy that works our IT, and then so he comes in after his day job, does a little work a few days a week and on weekends, and he just basically maintains our network. Not a lot of work for him. We're a small library, and he makes sure the public use computers are virus-free, keeps those up and working. And we also have a purchased and contracted services because we also have an IT company that manages the big stuff like our website and other things. So when you don't have a full-time staff that handle this, you are probably going to have this 220 program with purchased and contracted services on it. This guy never uses office supplies, except he might go get a pen and a tablet, some Post-it notes. So this isn't something I would budget for, but if you have a whole department, of course, that would be very, very different. When I'm talking business administration, once again, fidelity bond premiums was something that used to be shoved in an account code that was not really intended for it. And so of course, the fiscal officer is bonded for supposed to be at least of the money you have in that you're managing, probably double that. I don't know what that is. I don't know what the rules of that are now, but this is where it's going to be paid from. And if your director is also bonded, this is where it's going to be paid from. So my fiscal officer, my director, if you are one of those lucky fiscal officers that has a staff that work for you, I know that's funny too, you would have account codes for those things as well. I've got audit under here because it is the financial records that are being audited. It's going to go here, my UAN fees going there, and other purchased and contracted services. So if I have to have bank fees, here's the one that I went to bank fees. So remember I said that dues and fees do not mean dues of an organization and fees like bank fees. So we have direct deposit, and my bank charges us a monthly fee, $35 a month, just to have direct deposit. And then they also charge us 4 cents per wage. And so it comes right out of my bank account, and I'm posting it to purchased and contracted services. So I do need that inside mine. And then I've got a little bit of general administrative supplies, because the fiscal officer goes through a lot of paper, and I'm going to have to replace toner in my printer sooner or later. I've allocated a bit of a budget. So you can see I want each of these programs to be fully funded. I'm going to open the floor for questions addressed by LGS. And the folks here today are ready to answer questions that you have. And so we've got David Thompson, the Director of Local Government Services, Joey Jones, and Tracy McCreary. So you get the big guns on the job here, and they're going to start looking at your questions. Guys, you want to go ahead and open your mics and let me know that you're ready to start doing this?
I'm available. Trina, we'll go ahead and start. Tracy and I will do our best with these. We'll kind of tag team the questions, and we're going to start down on number 9, I guess. Can a cost center be used for different locations or branches? And I think you mentioned that maybe in your presentation that it could be used for that purpose.
That's correct. We do see libraries that separate the expenses of each of their branches by using a cost center named by the branch. And it gives them some detail. They can print reports then that would show what it costs to run each branch, but it certainly duplicates a lot of accounts. It's cumbersome, and we do have libraries that do it. And as long as you're attaching cost centers to the right account code, it just means you've got a whole lot of account codes for electricity and a lot of account codes for telephone. So.
Okay, the next question is from Kathy Stevens. It says, can I switch over to the new account codes mid-year after I have prepared the 2024 tax budget? And again, in listening to you, Trina, I think you said that you had to finish 2023 with the old codes. Is that correct?
No, the software won't make you. And I think you and I just barely touched on that question in a conversation we've had this year. And what it would mean is your annual financial report would show half the year posting to the 100 program and the other half posting to the detail accounts. It would certainly take it off your plate for year end, but what would audit think of that mixed bag of posting in the same year?
Well, I can't speak, and Joey's on the call today, and he can certainly add his 2 cents worth, but I would think that really would not be a very good presentation. And in fact, I don't know how audit would view that. Joey, do you have a comment?
Yeah, that would not work out well.
So folks, you hear what they're saying is, while it would take that transition at year end off your plate, it's not going to present it's an absolutely bad idea for annual financial reporting to have half the year at your 100 program, 100 or 200 program, and then the rest of the year, I mean, half your financials are not going to be presented with the other half of your financials. So what they're saying is it's not a good idea to switch mid-year. Most of the time when we see people who are told by audit they have to switch mid-year, you have to reallocate every single receipt and payment. You don't want to do that. That is not a good plan.
Next question is from Mary Ann. Are we are a small library. Our IT person just does a little on the side as part of our regular library job. Do we have to estimate the time and split a part of the salary? I know we talked about this, I think when we had our sessions with Michelle and her group. And Tracy, I know you had some comments during that meeting on this subject. If you would like to add.
Sure. I think there's a few things I'd like to point out on this. And one of them is in our frequently asked question document. It's question 10, and it talks about the idea that there is some professional judgment in allocating expenditures and how you're going to charge them to program codes. And we've talked with some of our groups previously that sometimes libraries develop a split on, developing percentages as to how they're going to allocate someone's salary between two programs. And in Trina's presentation, she had, a couple slides and some good information talking about tracking it, getting that basis for developing those kinds of splits, or looking at exactly what are the hours involved, so that if the auditors come in and look at that information, they have the documentation that they're looking at to support those splits. So I'm also going to let Joey, if he wants to add anything from an audit perspective.
Yeah, I would say use reasonableness. If this person is working IT 1 hour a pay, 2 hours a pay, it's not worth your time to split it out. Use some level of reasonableness. Now, if he's spending a day or two a pay doing this, then you may want to consider splitting it out. So there is a fine line there, though. So hopefully you can see that difference.
Okie doke. The next question is from Carly. We pay property insurance, directors and fiscal officers bond out of 100,341. Will I need to add 2 lines, 210,341 for the property and also 230,341 for the bonds and D&O policy? Tracy, can you handle this for me, please?
Yes, I can jump in. I think, as Trina worked through some of her examples, she pointed out some different things about insurance. So as you're going to the new program codes, there's going to be evaluating where those things that were in the summary codes, where they best fit. So again, it kind of builds off that idea of judgment, but splitting out the property insurance or the fiscal officers bonds, or like Trina talked about, if you have librarians that are collecting money and then taking the cost of those policies and distributing them to those programs based on what the policy is for, that all makes sense. Just like before, I'll see if Joey wants to add anything from, to get the auditor's perspective, but I think that this is on target with, trying to break those things out of those summary codes, and you may end up with utilizing more than one code when you're doing those splits.
Yeah, I completely with what Carly has there, breaking those out, the property versus the bonds for the director and fiscal officer.
Okay, the next question is from Jolene. Can the spreadsheets spreadsheet be imported back into the system with the new codes? I think that
No.
would be a Trina problem or issue.
No, there is no import back to the UAN software from your spreadsheet.
Next question is from Kathy. Can you explain why you're putting books, ebooks under 110? To me, it seems like the definition from LGS would put those in 120. Again, these are, I think, in your wheelhouse, Tracy. Sorry.
Yeah, I think there's been some development on this as we've been working through developing some of these questions. So I think early on in the process, there was we're trying to understand better what all was going to be in the 120s. So I do agree that I think some of the books and ebooks would fit under the 120s.
The other thing that the group should know is that when we come up with when they come up with questions or we run across new ideas that we hadn't thought of as far as our answering in the FAQs, that we will update those FAQs when we believe it's necessary to clarify another issue that you're having out there and going through this conversion process. Again, our goal with the information that we put together is to give you guidance. We haven't answered every relevant question in FAQ, but we're working on identifying the ones that are most on your minds. And as we do get questions that we feel need to be added, we will certainly add the question and a relevant answer to that. Next question is from Kelly. Where would expenses for a bookmobile go? Fuel, repairs to the vehicle, insurance.
We were envisioning the bookmobile in fitting in under the 210s. So part of the facilities operation and maintenance, it talks about library vehicles.
Okie doke. Next question is from Lucinda. So if CleveNet handles our IT work, but they don't itemize that on their invoice, how would we handle that?
I think that comes back to our same idea that we talked about with some of our questions with applying judgment to how you're splitting that. I may have to reach out to Lucinda a little bit on that because I'm not, just to familiarize myself a little bit more with the specifics of what CleveNet is handling.
Okay, Kelly asked, random, but is there a financial report that reflects a comparison to prior year and current year after changes are made, please?
Yes, in the UAN software, under budget, the budget module, reports and statements, there is a comparison of current and prior years. So there will be a report you can use for that. You can use it now to show the comparison of each year, but it will still be available. So all prior year reports will still show the old account codes.
Thank you, Trina. Next question is from Danica. Once we have a general idea of what percentage of time an employee spends on a program, will employees have to keep detailed time cards forever to track the actual hours? We have discussed this a little bit in the past, and I think and I think Tracy has used the terminology already today as far as professional judgment. If you develop percentages, and those percentages are based upon reasonable estimates, and you can support those reasonable estimates. And I think when this was brought up in another group that we presented to, I think Joey, he indicated from an audit perspective that as long as you had some written reason as far as, how you develop the percentages, that those would be allowed to be used. And as the years go on, then, those percentages may be updated. But again, I think you can do it with reasonable judgment and going through a process of updating the percentages each year if necessary. But as far as keeping detailed time cards forever, I don't think that's absolutely necessary in this case. But I also will let Tracy and Joey weigh in on this one.
I 100% agree with what you just said.
Okay.
Reasonable estimates, no need to overburden the employees of tracking every hour or whatever. The only time that really becomes an audit issue is when people are charging different funds, which I don't know if libraries necessarily do that. Like, say you get a federal grant and you can charge salaries to that grant, then we need detailed documentation of the time being charged, like to the federal grant. But if it's all the general fund, then I agree 100% with Dave.
So let's go ahead and move forward and talk about the second half of this, the actual adding of the account codes in UAN. So I'm going to start with the section on adding account codes with remove any old accounts you do not need. So we still have folks that have the CARES Act in their system, and you are in that sweet period of time where an account code and a fund that has not been used in the current year can be deleted, can be removed. So if it has not been used in the current year, an account code and then the fund can be removed. If it is in use, it's locked down for the rest of the year. And you're thinking, I don't care because every one of those account codes has a 100 or a 200 program code. And when I roll over into 2024, they'll be gone anyway. That's a thought process as well. But if you have any account codes that you are never going to use again, you've got a fund for a project that is over and done with, if it hasn't been used this year, you want to get those removed from the software. So when you add the budget financial worksheet, when you get to that point, you add your budget financial worksheet, it will lock down every single account code in your system as in use in the current year. So that sweet period of time after you close 22 and before you add the budget financial worksheet, you can actually remove account codes and then funds if they are not used yet. So we'll start with that. Now, if you use cost centers, every one of your cost centers will still be available to you. Just because the account code is going to disappear does not mean your cost centers will disappear from the system. So any existing cost center you use is going to be available to add to your new accounts. So if you were using a cost center, for example, under books for children's, probably a very bad example I gave, but when you split up your book budget between children's, youth, and adults, like my example, that children, youth, and adults is going to be available to add to the new account code. So they'll be in the system ready. We don't recommend cost centers on salary accounts simply because if you have an employee who's going to be paid from multiple account codes, for example, from the 110 salary program and the one of the other programs, let's say 210, or well, not 210, but 220, then you're not going to want cost centers on those because you would have to have an OPERS and a Medicare with each cost center for multiple items. So if you want to have that one-on-one conversation with me about why you don't want to add cost centers to salary accounts, you call the support line and they will find me and we will have that conversation. So like I said, this week I saw a system set up with cost centers so horribly complicated. The folks that are using that software now are just so bogged down with things split up by so many account codes that are not necessary. And like I said, we see libraries use the cost centers most effectively for real purposes. So I don't want to say that you're misusing them, but you just want to be real careful adding them to the salary account. So if you want to have that one-on-one conversation, you call the support line, they'll find me and we'll have that conversation. So we would start, if you have a cost center, like my example for electronic material, if you are adding a cost center for something you really need that you've never used before, you would have to start with adding the cost center before you can add the account code. The cost center has to be available to choose in order to create an account with it. So we would start with accounting, maintenance, cost centers. And you're saying, Trina, I'm not going to use cost centers ever. Don't go there. You won't need to. So you can see this system that I'm showing a screenshot of Buckeye Library in Franklin County, which does not exist except in my head, doesn't use any cost centers. Everybody has the 4 zeros. But if you use them, they will be listed here. If you're adding one, you click the add button, and this is the add cost center. You have to give it a number that isn't already used. And I chose one and called it electronic material. I can choose the name. Again, I'm going to attach it to an account code that means the purchase of items that would qualify. But I showed you there's a thought process to that. The different people would say that you would attach it to a different account. Once you save that, it will be available to use. And then we would go to accounting, maintenance, appropriation accounts. Again, this is adding the new account codes in your UAN software. So you're thinking, well, when am I supposed to do that? Well, remember the deadlines. So if you have to file a May budget, you are probably going to start working on that fairly soon, at least by somewhere in April, if not already in March. You would need your new account codes added to your software before you add the budget financial worksheet. Folks that have a July deadline, if you're going to do your work on paper before you get into the budget module, then of course you can use your spreadsheet to do that. But when you're actually ready to put the figures in the budget financial worksheet, you have to add all these account codes so the structure pulls into the budget software. So we're going to click the add button, and this is what the add form looks like. I've got a big red X on the right side because departmentalization is something you have to initiate. And I don't think there's a single library who has initiated department segregation. It's used by our larger cities, townships, and villages where they have 7 or 8 people posting in UAN. And those are where they're isolating one person's access to other things. So I don't think a single library in the state's using them. So I've got a big X on that, and we're going to focus on what's to the left. The left side is where you're going to add things. So this is what it looks like. So at the top of the add appropriation account list is where I'm going to choose what I'm adding. Of course, right up here, you're going to choose your fund first from the drop-down list. And then you're going to choose your program right there. And then the cost center always starts with 4 zeros. And because I only have one cost center, I'm going to start with the items that have 4 zeros on them. And notice I've pasted a copy of my spreadsheet grid over here so that you can see both. So every one of these account codes and I'm not saying they're right or good examples. I'm saying I'm a UAN employee. So what we're looking at over here is you're going to make the selections for the items that you need to add. Once you choose a fund and program, all the object codes will appear in that box. So let's get started on that. So my list is longer than a screenshot can show you. So I've highlighted in yellow the items you can see check mark to the left. So once I chose 1,110 and 4 zeros for the cost center, I can see all of these account codes in my screen. And there is a bar that you can drag down to get to more account codes. So we can't see all the account codes. So all I had to do was check mark the account codes in my list because all of them start with 1,110 and end with 4 zeros. All I have to do is check the boxes. So there's the first group. Moving down, I check the next group. Moving down, I check the next group, but I'm skipping the cost center because it has to have a different 4 digits in the cost center box. And I have finally get to the last one in the list. You can see now I've checked marked them all, and I would click save, and that adds every single account code. So now we have added those in just basically a couple of clicks. It's not difficult to add a large group of numbers. So the thought process is more difficult than the software process. So once I save that, I want to deal with my cost center in that program. So I'm going to, once I've got them all checked, I click save and they've all gone to the list. So then I'm going to move forward with my cost center. Same fund and program. My cost center is now 1,001 for electronic material. And all I have to do is check mark 414, the one I'm attaching it to. So as some people commented on, they would be attaching this differently or accounting for it in a different program. I'm not the authority on that. I'm really just showing you, you have to think it through and then add your account code. So I'm going to click the save button and that adds that account code. And then all I would do is change it's still the same fund. It's the next program, 120. Pull up my list, check mark all the boxes for 120, click save. Change to 210, check mark all the boxes, click save. 220, check mark the boxes, click save. Very, very simple to add those accounts, but you have to do the thought work first. You have to know what accounts to add. So software part's easy. All right, once you add them, and this is just, I took a screenshot after I saved the 1,110s before the cost center, and you can see that the account codes are showing up in my grid, and everything that rolled over from the prior year says by year end, all account codes that rolled over from the prior year. And Lotta is my fiscal officer in my fake Buckeye library. And every one of those was here. So all of your 1,100 accounts would be above here. They're going to show up above all of the new accounts. So you want to leave them active in the software because you can't use them in the budget module unless they're active in the software. If you deactivate them, you can't put any budgets on them in the budget financial worksheet. So you are going to have to leave them active for a short period of time at least. Some people will leave them active till the end of the year. When all your new account codes are added and you are ready to use the budget module, you're going to go to Budget Transactions Financial Worksheet and click the Add button. Budget Transactions Financial Worksheet, click the Add button, and your Budget Financial Worksheet add form pops up, and it's going to ask if you want to combine. You have to choose always. So there's nothing different about this from prior years, and I know some of you are new and you haven't seen this, and we always do a budget video for the actual use of the budget software. But you are basically doing all your figuring out of the budgeting on your spreadsheet. I really wouldn't recommend trying to do the thought process within the budget financial worksheet. You really want to come into here with your numbers. So in my case, the only one of these 4 funds that are actually going to be budgeted in the new year is my general fund. My library grant, that fund is going to be finished in the current year. It's not carrying forward. My CARES Act, we're never going to spend another penny from that. And my capital project is ending this year. Now, that's an example of a small library with only one general fund in most years. You may have some endowment funds and some capital project funds and building funds and other things. So you will be budgeting every fund you need to budget, and you have to have the new account codes in every fund that is relevant to the program code change. You're not going to be able to have a 100 and 200 no matter what your fund number is. So once you've got your funds selected, you're going to click Save, and it's going to open up the Edit Financial Worksheet. It looks the same as it's looked in every other year you've ever used this. So for our seasoned veterans or even 1 year under your belt, it looks the same. There is nothing that has changed in the Budget Financial Worksheet. So it is at least going to be familiar to you. So let me run through that because it's been a year or more since you've seen it. At the top, you'll see the name you gave it. The fund always starts with the general fund. I think I need to get a pointer so you can see. Starts with the general fund, but you click the drop-down list. If you've got 4 or 5 funds, they would be on this drop-down list where you could see them. So it's always going to start showing you the general fund, and you can always change funds in the middle. You always want to save before you change to another fund. It opens up on the revenue tab. Notice that opens up on the revenue tab. Always has, continues to do that. You see 4 years in here, 2 prior years, the current year, and 2024. We're not going to talk about the actual budgeting much. This is the software we've used. Looks the same as it had for years. So at the bottom, it shows the actual ending fund balance of prior years and the estimated year-end balance this year. And there's just nothing different about it. You enter budgets in the editable white fields. That hasn't changed. So the grayed out total lines where everything totals up, you can't touch that. You can only touch the account codes. Now, you enter the 2024 budget in the far right column under 2024. Your revenue codes aren't changing. So this program code change is not affecting your revenue codes. You're still going to see your revenue codes just like you always have. You will see them right across the line. You're going to be budgeting 2024 on the same line you see the history, as long as it was used. These are the same account codes, right? So revenue is not going to change, but when you get to the expenditure tab, this is where you're going to see the change. Of course, library services, the account codes with a 100 are going to be at the top of the list because they have it numerically, they are at the top. This is not where you budget. You're going to see your 2 years of history and the current year on these old accounts if you did not make the change. So those few people, I know at least one person who made the change for January. They're already using the new account codes, are in the audience today. And so they will see 2 years of history and nothing in the current year in 24 because they're not using the 100 and 200 accounts now. So that handful of people that already made that transition are only going to see the 2 prior years here. And this is why I say use your worksheet to do the budget work, because in normal years, you can see that you could just, if you were experienced, you would open up this budget financial worksheet and say, this is what we spent 21, this is what we spent 22, this is what we've budgeted this year, therefore I'm budgeting this next year. Can't do that because you have split this up into multiple account codes. So you will not enter any 2024 expenditures on this library services account. You are going to scroll down to the new program, public services and programs, where you see the 1,110. You see that? These are all 1,110 accounts. So public services and programs starts the next grid. There's no history in the last 2 years and nothing in the current year because I am making the transition January of next year. So I am going to budget from the 2024 column at the new program level. So you won't see the history. That's why I'm saying do the worksheet and the spreadsheet, figure out what your budgets are on the new accounts so that when you come in here You are just going down this column and entering the budgets. Every account code is not always budgeted. Like, for example, when we get down to the 230 business administration where I have audit, we budget that every other year. So just because the account code's there does not require a budget, just like the software is not changing. So it's just that you will have different account codes to budget for 2024, and your spreadsheet will contain that information. So make your entries on the new account codes. When you're ready to save, click save. It's always going to take you back to the general fund if you're in a different fund, and then you change the drop-down list and continue. So complete your budget on the new account codes. And as you scroll down, you'll see those other programs in a row. All right. So very simply, the software is not the difficult part. The budget financial worksheet isn't difficult. It is simply you have to add the account codes. They're all going to appear in there. You'll be able to put the 2024 budgets on it. So in the accounting software, so let's say I finished my budget financial worksheet and I go to print an appropriation status, and every single old and new account are now showing up, which is extremely annoying, right? All of the new account codes in 2023 appropriation status reports are going to have zeros on it. There's nothing budgeted, nothing spent, nothing on them. Don't deactivate them, because that's going to drive some of you nuts, I know. Don't deactivate them until you're finished with the budget financial worksheet, because deactivated accounts cannot be budgeted in the financial worksheet for the budget. So you have to leave them active while you're working on that budget financial worksheet. And if you want to deactivate them, again, it's not going to take them off the appropriation status reports. And you say, why? That's a flaw in the software. No, it's not. There is a reason. Oh, there's my lunch alarm. Sorry about that. I forgot about my lunch alarm. And so there's a reason deactivated accounts still show up on the appropriation status. It's always, when you see things like this, it's because somebody misused deactivate. So, and some of you, when I give this example, you're gonna say, yep, I've heard some fiscal officers say that. So when you go to LGOC or these annual conventions, you may be sitting at lunch with some people who say some very shocking things. And you probably have heard somebody say, well, I don't show my board those appropriations or they would spend it. What? So so there is a reason deactivated accounts appear on the appropriation status list. And you could choose not to select them and print an appropriation status report. But if you don't select all the accounts in the list, at the bottom of the printed report or saved as PDF report, it is going to say not all account codes appear. Now, that's why there is a reason that happens, is because the governing board who is looking at that report would know the fiscal officer has not selected some of those accounts. So deactivating them is not going to get them to stop appearing on the report. However, it will stop them appearing in the drop-down list when you are adding a purchase order. Of course, all your 1,100 accounts are going to be at the top of the list on those drop-down lists. But if you've got more than one fund, you got a whole lot of account codes you have to skip to get to the next fund. And that can be very annoying. So if you deactivate the appropriation accounts for the new accounts for the rest of 2023, they won't be in any of the add drop-down lists. They're still going to print on reports, but you will not have those pulling into your drop-down list when adding a payment or a purchase order. And some people will go the route of deactivating for that purpose. At the end of the year, you, of course, are going to want to activate them again. So in 2024, you can make use of them, right? So when you open temporary mode, when we get to December and you install that year-end release, and you open temporary mode and log into the new year, you could go in there and activate those accounts. But I believe in temporary mode, when you do something with appropriation accounts, it does it in both years. So whether you activate them again in 23 or 24, I think you're going to see them activated in both years. So having them in the system, you don't want to remove them. Whatever you do, don't try to remove them. the software is going to tell you they're not removable once you've used them in the budget financial worksheet, but deactivating them will not probably have the results you want. It just means they won't show up on the add lists. Let's talk about year-end 2023. So you've got all this is coming at you, and they've already told you, you know, because I was thinking the same thing. After you complete the budget financial worksheet, why wouldn't I just reallocate the budget and start using the new account codes and then get that done in the middle of a year? Yeah, your annual financial report would be skewed. So they are not recommending that. It's not a good idea. So with the 100 program codes, you have an annual financial report that is not as accurate as it should be, but half a year with that and half a year with the other program, with the detailed program codes, is also not a good report. So they really would not want you to make that change mid-year. The folks that usually have to make a mid-year change have to reallocate every receipt and payment. It's not a good plan. I would not recommend that. So I think that what you really want to plan to do is continue using the 100 account codes through the rest of 23 and start 2024. When you open temp mode and log into 2024, you're going to put your appropriation budgets on the new account codes. In 24, you're not going to see in the budgeting portion or the use portion at all the old account codes. It's only on prior year reports what they would show up. So you are going to continue in 23 posting to the same account codes. For those that don't have to file a tax budget, you really don't have a mid-year deadline. But like I said earlier, if you are in one of the counties that doesn't file a tax budget, don't leave this for December. Get the brain work done. Figure out what account codes, what employees are going to be paid, and get this done on a spreadsheet. Could you use the budget software to plan next year? Yes. We have a lot of folks that are in counties that don't file a tax budget, and the fiscal officer uses the budget module to plan the next year. It's not a formal adopted budget, but it is a working document that helps them get things ironed out. Somebody really needs to think about the next year, even if you don't have to file a tax budget. So if you don't file a tax budget, please, I would say you want September 30th, the brain work done and the figuring out of employee structure. What you may not have thought about now is if you have been using the same boilerplate legislation for your adopting of your permanent and temporary appropriations, and it has all the account codes and numbers that you've used for years and years, you're going to have to update that because now the account code structure is completely different. So when would I work on that? Yeah, sometime between after I did the budget and by September 30th, get my reformatted piece of legislation. So remember the downtime, where you are not dealing with year end, putting in new year appropriations, and then moving forward to the tax budget. The downtime is between July and September. And I know that's probably the busiest time of the library because you've got the kids out of school and it's busy, busy, busy. But that's the downtime for UAN. We have less call volume between July and September 30th than any other time of the year. That's the time you want to call with some, I need some help figuring out how to restructure. What report would you recommend me print for deciding what my new POs are going to be? Because in the new year, there is not going to be a duplicate button. They can't duplicate POs to account codes that don't exist. So you are not going to have a duplicate button for any PO that was on an account code that had a 100 or 200. So you need to print your purchase order status report, and you want to go to the filters tab because it's only going to show you open POs. If you want a report that shows all the open and closed POs, you go to the filters tab and change it to all, status all, and then it will give you a list of all the POs, whether they're open or closed. And then you just write on them, print that as a physical piece of paper and write on them what the new account codes would be. Make sure you're doing that work ahead of time so that you roll over to January, you put your temporary appropriations in, and then you're standing there going, oh, I don't know what my POs go to. So do that physical work in the downtime, the less busy time of year. Okay, carryover encumbrances. We do have to think about that. Audit and the software, therefore, is not going to permit you to carry over any encumbrance on an old 100 or 200 program code to pay bills. And, you know, in past years, that's seamless. The software just does it for you. If you have unpaid withholdings from December that get paid in January, piece of cake. Not this year, from 23 to 24, no carryover encumbrances. So there will be a lot of the smaller entities that aren't going to have this problem. They just simply don't have carryover withholdings. They are able to pay everything by December 31st. And I would say, oh, okay, that's a few of you. It is more likely anybody with a biweekly payroll is going to have a carryover encumbrance for OPERS, because one of the biweekly paychecks that has a December ending pay period will be posted in December, and the second one with a biweekly pay period ending in December will be in January, meaning half your OPERS is in each year, and the new year you can't carry it over. So we will be helping you deal with that when you've got temp mode open and you can't carry over that unpaid withholding. We will be able to work on that, but you will need to know what new account code will be paying that share. And so I need you to start thinking about that and plan ahead. And I can already hear some of you must be really talking loud to your director saying, we're going to tell people they can't buy anything after November 15th. And of course, that is one way people, because I've heard village and township fiscal officers say the same thing. I never have to deal with carryover purchase orders because we tell everybody they are not allowed to spend money. Okay, that's all well and good, but every now and then the furnace breaks down and they come and fix it and you get the bill in January. Yeah, so in any normal year that would carry over, not a problem, not this time. So we will be talking to you at year end. We will be helping you with those issues, but you want to think about it. If you have a plan, it will be easier for you to know what to deal with. So I need you to think about 2023 unpaid withholding. So do your best to pay taxes and retirement from 23's posted wages before December 31st, 2023. And some of you are saying, I can't. I absolutely can't. I understand. Not everybody will. Again, if you've got biweekly, maybe you could pay the taxes, but not OPERS. You're going to have half and half, right? The checks are posted in 2 different years with a December ending pay period. Those of you that don't have biweekly or don't understand that statement, but then again, you don't have biweekly and you don't need to understand it. But those that do are thinking, yeah, remember, we're going to help you with this. We are prepared to help you with this. So when your next question is, well, when can I do the payroll setup change? Well, when you open temp mode, you know, as soon as you get that year-end release, you could open temp mode and in 2024 change the structure of the payroll at any time, because what you do in the payroll in 24 has no effect on the employee setup in 23. You could still post live wages. But if you're thinking, I don't want to mess with it until my last paycheck is posted in 23, then that gives you, if you've got biweekly pay, you have a 14 days to completely restructure payroll in the new year. So I want you to start planning that. Look at your December calendar. I think I have a picture. Yes, look, there we go. Plan your calendar. So for those of you that have biweekly, I looked at the calendar, and some of you, for example, and you have to realize everybody's not on the same biweekly pay schedule. So I'm going to just use the most common example is we get paid every other Friday. So some people are going to have payroll on the 1st, the 15th, and the 29th. That means you got to pay, you've got paychecks posted. Now, if you've got direct deposit, that means you got to upload that file 2 days before. So for example, my bank needs 2 days. I have to upload that on the 27th for payday on the 29th. So I have to post wages on the 27th with the 29th payday. right there on the 27th, when the last paycheck is posted, I've got 14 days. To be honest with you, I wouldn't wait that long. As soon as you have access to the new year, and then that is as early as you install the year-end release, you can open temporary mode and log into 24 and restructure your payroll. It does not affect 23. So use that valuable time we give you with temporary mode to get that payroll restructured. I talked to one library fiscal officer. They pay monthly. Everybody is part-time and they pay monthly the first week of the month. So for example, on December 7th, they are paying for November's pay period, November 1st through 30th on December 7th. No more paychecks are going to be posted in 2023. They can actually restructure their whole payroll in 2023. Will make a bit of difference. Nobody else is getting paid. They could also just log into temp mode and make the changes in 24, but they've got a whole month. The first paycheck is going to be posted the 5th. So I have to, in order to do direct deposit, of course, I would have to be able to post those wages physically on the 3rd for the 5th post date. So a person who has monthly pay has a month to make the change, but temp mode is going to let you get into the new year. If you have a payday on the 29th, we have nagged about this for many years. Fiscal officers who pay withholdings on the same day as payday, some people even earlier than payday. For example, the fiscal officer that has to post wages on the 27th for the 29th because they upload the file for direct deposit, they have they go online to EFTPS and Ohio Business Gateway and go ahead and pay state and federal taxes before payday. That is never a good plan. It's never a good plan. Why do I know that? Because we have hundreds of calls every year when an employee gets their paycheck on the 29th and they come into the fiscal office and they say, hey, you paid me wrong. Well, you can't void the check now. So if it's a physical check, you can void it, but you've already paid the withholdings. So we say it is the best practice to wait 1 business day after payday before creating and making those online payments. So that best practice would mean I got to post the wages for the 29th and I have to carry over the December withholdings and pay them in the new year. And the earliest date, I think Monday will probably be the holiday, and Tuesday will be the first business day that you'd be able to pay those. And what does that mean? That means December carryover withholding. So if that's you, yes, we will be there to help you figure out. You will have to tell us how much, who belongs to which account code in the new year, but we'll help you with the process. Let's say that you don't have biweekly, or let's say you're biweekly every other Friday, but your paychecks aren't the 1st, 15th, and 29th this year. They fall on the 8th and the 22nd. You can surely pay your state, federal, and local taxes and anything else before the 29th. You've got 5 business days to make those tax payments. Now, OPRs, it's going to depend on the pay period. So the last paycheck with the December ending pay period is going to determine whether you can pay OPRs before December 31st or not. So if you have any problems wrapping your head around this is things we want to talk about before we head into the 4th quarter. We want you to be comfortable rolling into the last quarter of the year and know what you're going to be doing. So take a look at your pay schedule, think about what you're able to do. And what I want you to remember is UAN has a training mode. And the director of UAN told me today, they have looked to see how many times training mode has been used this year. 7,000. Is it this year? Last year. So last year, training mode was used by our customers 7,000 times. And that is extraordinary because we have been trying to remind people there is a training mode. People forget about it. Training mode is a safe place. It actually makes a copy of your live accounting and payroll data and pulls it into a training environment that looks exactly the same except it's got training mode all over it. And in that training mode, you can actually edit your employees and practice restructuring without causing any harm at all. So yes, after you get your budget done in July, and you're in that period of time between July and September 30th, log into training mode and give it a try. Get comfortable with the process of the restructure. In training mode, you can actually post wages. Of course, it'll give you a compliance violation. There's no appropriations on that account, but it's training mode. There doesn't have to be appropriations. So what you want to be able to do is make sure you understand all the connections. A one account code part-time person is not going to be difficult. A multiple account code person who has overtime and leaves, and the OPERS and Medicare is going to be split between multiple accounts, is going to be far more complicated. You want to be comfortable with the process. Don't forget about training mode. That wraps up the entire presentation. So we now have time for some more questions. So my LGS team, are you ready to answer the balance of those questions?
We will do our best, Trina.
Okay, there's our question slide.
The question we left off on was number 23 from Dan. And it says, use of 220 IT has been confusing to me. For example, if we purchase a computer above the capital threshold used by patrons, is that 110, 220, or 760? Your FAQ on 220 mostly clears that up. However, it says databases and software subscriptions for staff/patron use. We have lots of databases used by patrons. For an example, Ancestry, wouldn't those be charged the 110 public services? These are excellent questions, Dan, and we have actually talked about that on our break. And what we're going to do with your question is it's something that we haven't taken a in-depth look at this point, and we are going to do that. And then we are going to update the FAQs. So please note that you have prompted us to go back, and we will revisit this issue, and we will include that in an updated FAQ. Those, again, I think we will talk with our with AOS administration and find out the best way to notify you, but we are certainly going to get the FAQs updated for you. The next question is from Brian. Under salaries, 110, is this for librarians? 210 is for maintenance, 220 is for IT personnel, 230 is for administration. What is 120 for? Tracy or Joey, I think we talked a little bit about that. Did you want to clarify?
I'll provide a little bit of clarification. The 120s, I know that from some of what Trina talked about and some of the other questions, there were folks that were trying to locate the definition. So there is the definition there for the collection, development, and processing. It's kind of more focused on the books, periodicals, pamphlets, and so forth that are made available for public use. We did, from some of the other questions, we are going to provide a little bit of clarification there as far as what types of salaries you might see within the 120s. So just building off of what Dave indicated for the computers and software, providing some additional clarification to really nail that down. We're looking to provide a little clarification here as well. So look for that to be forthcoming.
Okay, next question is from Janet. What object code do you use to budget new computer equipment? Life of 5 years. Do they need to be split between program codes? Okay, go ahead, Trace.
I was just going to say, I think that kind of is built off of the previous question about the computers and so forth. We're going to provide a little bit of clarification. We're going to meet internally and provide some additional clarification on the computer equipment.
Yeah, some of the questions, and first of all, the questions that you're bringing up to us, we truly appreciate. These are questions, we have had many meetings with library officials to this point, and we have tried to address the issues that have came up to us and have done that with FAQs. And as I said in the beginning, we will continue to update. And the questions you're bringing to us today that we haven't had a chance to consider, we, instead of just flippantly coming off the top of our heads, it's best that we go back and discuss it between the three of us, and then to come back and update you with our particular guidance. Again, just like you're going through a process right now, we're also going through a process and trying to help you the best we can. Next question, again, is from Janet. Wages to department heads. Example, circulation, reference, do they need to be included in program 110 or 230?
We would normally think of department heads falling more under the 110. The 230 business administration is for the overall library. So just in general, I would think of those department heads as fitting in with the 110s with that specific department.
Jennifer asked, with program codes, would reference employees be paid out of 120?
And that's one of the, we were going to look and kind of tweak some of the definitions and look for some guidance there on those reference employees when that comes out.
Okay. Dan, we started breaking out salaries by program codes in 2023. UAN makes allocating OPERS and Medicare easy. But do you have any suggestions on how to break out medical insurance expense by program code? Please excuse me if you've already covered that.
I think that's really more a software question. Is that what you're thinking?
Yeah, if you're asking me, yes.
Okay. Okay. I just didn't want to start talking when if you were going to answer it from an LGS standpoint. So in the software, there is a setting in the withholdings for OPERS and Medicare called object split that means follow the earning. And Dan, you're right. That is a wonderful piece of programming that makes it easy to allocate Medicare and OPERS employer shares to the right place. You don't even have to think about it. The software does it. Wherever you put the hours on the account code on the earning, the employer share follows. There is no such setting for items paid from accounting. The employee share of insurance. So Dan, if you're talking about the employee share, the software is going to do that automatically, because withholdings come out of paid earnings. So the employee share is automatically allocated based on earnings on individual paychecks. But the employer share of insurance that you pay out of the accounting side is going to have to be figured to match. So most people, and again, villages and townships already have to do this. So I'm thinking from that standpoint, I always had a spreadsheet that showed the percent split between employees, departments they worked. And that's how I tallied up the split for the employer share of insurance. So there's nothing in the UAN software that is going to make an employer share paid out of accounting match the allocation of the last wage. So it's going to be done by you, and most people have their little cheat sheets to figure out how to divide that up on each of the premium payments.
Next question is from Ida. Can these account codes be added during temporary mode, or can they be added in 2023 but not use them?
Ida, that's you must be in a county that does not require a tax budget, or you would have to add those for the tax budget. So it can be done either way. So you can add them in 2023 in preparation for use in 2024 if you don't want to wait. You're not going to post to them in 23. So the software is going to let you add them when you want to add them. So go right ahead and get those added before you get to December if you want that off your plate. It's just going to show up with more account codes on your 2023 reports, but that's really not that. It's not a problem. Nothing is being spent from them. They're not being budgeted. So start as early as you like. You just won't use them until 2024 if you're not doing a tax budget.
Next question is from Brian. After I add the new account codes into the system and prepare for the May deadline, after all is done with account codes, let me get this straight. As I am listening to the webinar, I continue to use the old account codes to the end of the year.
That's correct. That's
That
both
is,
what.
yeah, I was just going to say,
Yeah.
I think it's your question, but that's what I understood you saying during your presentation.
Yep, and you confirmed that when you said that, it would not look good for someone to have half a year on the annual financial report on the old accounts and the other half on the new accounts. You really don't want to do that. So you will have the new account codes. You simply won't start posting to them until the new year.
So agree. Next question is from Carly. Is there any chance year-end review will be earlier this year with all of these changes? I think that's yours, Trina.
Carly, no, we can't do the year-end presentation any earlier, just simply because we can't do it until we have the year-end release. There's a lot going on at UAN to prepare for year-end, so we can't do it any earlier. But this year, we are planning to possibly do a preparation for year-end kind of training. And of course, we want to be available to libraries who are preparing for these changes. So we can't do the year-end presentation, the annual year-end presentation, any earlier. It's always going to be right in early December, but we can have some training and preparation, especially because of what the libraries are facing. We want to remind you of what you're dealing with and how to be ready for that, and talk about the carryover encumbrances and things, especially for libraries, because no other entity type is dealing with this year, just you guys. So we're going to have some extra training, whether that's going to be a webinar that you can watch earlier or whether we'll have a live, we don't know at this time, but we'll do some extra training.
Mary Ann asked, since the budget has to be done by May, when do you expect to issue the updated FAQs? We will update FAQs for questions coming out of this session. I would hope we will be able to update those within a week. The three of us will get together and we will do our best to get those updated within a week's period of time.
Once we have that final version, we'll post it on our website under training, accounting, and then you'll scroll down to this video and you'll see it'll be the updated LGS FAQs and definitions. So when we have it, you'll see the updated one right there in that list. We'll put the date on it so you see it's a new one.
Thank you, Trina. Kelly asked, how will we receive the updated information you're going to be providing after? I think you just answered that. Okay. Bridget asked, I have done the prep work and am ready to input the new account codes into the UAN system. I was going to do this before I enter my permanent appropriations, but it sounds like that is not a good idea because of having two financials due to account code changes. So I should wait until the end of the year to input the new account codes. Is this correct? I do not have to do a tax budget.
So this is
that
another one of those questions. It sounds like they started the year with their temporaries on the old account codes. So again, you probably don't want to reallocate every single payment to the new account codes. Therefore, continue posting to the old accounts through the end of 2023.
Yep. Okay. Marcia asked, would you recommend 110 or 230 program code for a PR manager and staff? Is that something you want to look at, Tracy?
Joey and I were talking back and forth. We're not exactly sure what we're talking about, but if it's a public relations for the library as a whole, we would be leaning towards business administration. But if we need additional information, we can reach out to Marcia just to make sure that we're understanding what the question is.
Okay. Next question is from Brian. Is there an OPERS fringe benefit back to the employee that needs a separate 110 code account?
That's a UAN software question. I would say most of our fiscal officers that have fringe, and what fringe means is the library is paying part or all of the employee share of Medicare or OPERS. It's not common, but there are people that have that at their library. Most of the time, the fiscal officer has chosen the OPERS appropriation account for the fringe because it is the employer responsibility to pay the fringe. Doesn't have to be two separate account codes. The payroll software in reports would reflect the fringe, but most people pay that to the same account code. I would highly recommend using the same OPERS account code. Then we get into cost centers, and some people want the fringe paid from an OPERS account with a cost center. We would want to test that out in your training mode to show you what difficulty that's going to create. So not sure you want, that's what I'm saying, when you start using cost centers in items that run through payroll, you create a level of difficulty you pretty well don't want to do. So we can always test it out, but most of the time our clients use the employer OPERS account for the fringe because the employer is paying it. It is actually accounted for correctly that way.
Trina, I think we have reached the end of the questions that are in the queue right now.
Okay, thank you so much for attending today. Our training department team has said to remind you, go online and self-report right now. You get 3 hours of credit for this webinar, and they want you to immediately self-report. It's already available to go self-report this training. Don't forget to do that. And if you have any follow-up questions for UAN software, don't hesitate to call the support line. We've had a couple of our support line folks in the presentation today, and everybody else is going to be watching the recording. So we're all up to date on the assistance that you'll need. Don't hesitate to call us. We want to see you using the training mode to try things out. We want you to be comfortable with the process long before January rolls around. So we expect to be getting calls from that, and we're going to be ready to help you. Thank you so much for your time and attention, and give us a call if we can be of any help.